Hello, everyone. I'm excited to welcome you to our live webinar, Escrow Accounts, Enhancing the Customer Experience. I'm Sherry Monroe, and I'll be moderating the conversation. I work with Cashfac to provide escrow and wider virtual account solutions to the wealth management market in the US and in Canada. We're so pleased you could join us. Today, we will explore how banks can enhance their customers' experience through an escrow account service, regardless of the customer size, sector, or complexity of escrow requirements. Demand for greater customer control, regulatory drivers, and advances in self-service technologies have made improving the bank's customer experience a progressively important point of differentiation. In partnership with Bloor, a leading independent research and analyst house, the topics we will cover over the next half hour or so will include the changing application of escrow accounts, underlying technology and regulatory drivers for change, implications of the control shift from bank-centric to customer-centric, how banks can enhance their customers' escrow account experience, and ways banks can reduce administrative overhead, risk, and save time. We will also have a live Q&A session at the end of the presentation, so please feel free to type in your question on the chat module on your screen. And if you miss anything, don't worry, we will share the on-demand recording once it's available. Alternatively, please send an email to our marketing team at Cashfac anytime. Now, I'm pleased to introduce our two speakers for today. You may have read their bios on the registration site, so I'll summarize both of their impressive backgrounds. Tim Martin, Head of Product and Pre-Sales at Cashfac, has worked in the banking and financial sector for over 30 years. Currently, Tim is responsible for defining the product strategy at Cashfac and ensuring the roadmap aligns with the company's customers and bank partners. Working with the sales team, Tim helps prospects to understand the value proposition. David Bannister, Chief Analyst at Bloor Research, has been writing about technology for 40 years. For the past 5 years, David has worked as an industry analyst covering wholesale payments, transaction and corporate banking, financial market infrastructures and regulation, and analysis of the fintech sector. David is a well-known moderator, panelist, and speaker, and has taken part in many international conferences. In addition, he has provided consultancy and training for leading IT and financial technology providers. I think we're in good hands on the topic of escrow accounts and enhancing the customer experience. David, I'll pass it over to you first.
That's great, Sherry. Thank you very much. Hope everybody can hear me. I'm going to move the slides. This is should take us. So yes, hello everybody. My name is David Bannister, as we just heard, I work currently for Bloor. I recently joined Bloor. Actually, I only joined them in August this year. Previously, I've worked with other analyst firms in the last 5 years, and as Sherry said, I've been following this subject for a really far too long a time, to be honest. I think I'm very glad that Cashfac have asked me to do this, because I think this is an area that's really interesting, where a lot of technology and regulations and so forth are coming together and changing the way. And now it might seem odd to have a Brit in Europe talking about the way this might work in the US, but I'll explain that to you as we go along. I mean, essentially, but I think one of the first things we have to do is define what we mean. I went, yes, I've gone one slide too fast. This is so escrow accounts, trust accounts, client money accounts. They're kind of becoming names for the same thing. I think what's really happened. I'm very glad Sherry mentioned the phrase virtual accounts, because that's how I first came across Cashfac, who have a really, really long track record in this area. And with the advent of a number of technologies, particularly connectivity, we'll come on to that in a minute, things are changing in the way that people use accounts. And it's happening in the UK. We've had real-time payments for a while, and I think we must define our terms. Escrow accounts originally meant accounts where almost like a shared account, or a joint account, as I would call it in consumer banking, where two sides couldn't change anything without each other's consent. It's used in things like software licensing, very much in real estate, where there's a transaction is involved that relies on a condition. So that's a kind of legal definition of it. But in fact, if you go onto any of the sort of Wikipedia type sites and ask for a definition, I found one yesterday that gave me 250 web pages of definitions of what it means. I think it means different things to different people, and we should put that right up front. And when Tim comes on, he'll give you lots and lots of good examples of where these slight differences mean. But in practice, it really means, I think it increasingly means what we might call client money accounts, to be honest. It's where you're holding funds for someone else. And it may be that the legal definition of the transaction that underlies that could just be a mandate. So virtual accounts in a modern form, as opposed to a very old-fashioned and long-standing cash management tool, are becoming more valuable. I think the other thing that's happening is because we all have iPads, iPhones, other phones are available. Instead of being a very passive, mutually held account in that legal definition, it becomes a very active component where both sides are able to play with it. So yes, have I been paid this money? Can I move it somewhere? So those are the things that are changing. And let me go back to this. The things that are changing are really because of underlying technology and regulatory reasons. I spent most of the last 2 years dealing with the US market because you're going to get real-time payments real soon. I heard we're very excited for you. We've had it in the UK for 18 years, 19 coming up, depending on whether you discount 2019. But really, it didn't really catch on in a business environment until open banking came along. Now, open banking within the European environment, and I still count the UK as part of Europe. In terms of banking law, it very much is, as it is part of international banking law. It introduces a lot of stuff to do. A lot of opportunities come from basically data sharing. So you're allowed to share, if you are the owner of the account as a customer, and the bank has to share that with any other entity, regulated entity that you choose to. So, I share stuff with, I have a main primary account for my business with Starling Bank, which is one of the new banks, but I have a main primary account for my personal life with HSBC, because what that tells you about me and my risk aversion is a different thing. But I can actually move money from the Starling account to the HSBC account using the HSBC app, because that's what open banking lets me do in the European environment. I've got some numbers that I can share with you later. In this classic sort of PowerPoint presentation format, I don't like to throw up the numbers because you'll all read them before I say them. It took 18 years for the UK to fully move. In the last 5 years, real-time payments in business have moved from around about 5-10% up into the 70s. There is, it's replacing direct debits, standing orders, older, long established and still quite valid in some cases, payment mechanisms. And in business, that's got particular applications. It has one particular application. I use this slide, I use this phrase a lot. So, because with real-time payments comes real-time balances, and in business, that is just gold dust. In one of my previous firms, we did a survey, and the details we published at that time. I was with Ovum, so I might as well give them some credit. Showing that 96% of European businesses would switch their banking provider, even to a startup, a fintech type bank, a challenger, if they could get real-time balances, because essentially most businesses want to know where the money is. So these open banking APIs and so on, they have really changed the game. So it took the UK that long. If you look at the European Euro money system, where they introduced real-time payments towards the end of 2019, they've actually already reached in that, and given that 2019 wasn't a great year for taking stats, they've already reached 25% of all business payments, and that's across a continent. So that's kind of equivalent with one currency among the states in the US. So I think when the US really gets going on real-time payments, and particularly, it's not a consumer issue, it's a business issue. It creates huge opportunities for business banking, and what you might call escrow accounts or virtual accounts or any of these is where that is really going to apply. So the other aspect of that is, again, a technology-driven thing, which is the control is shifting. And I'll slightly credit an old colleague, Enrico Camarelli, from IT Group. He saw it as moving from a bank control thing. And we all remember when banks had interfaces that were essentially green screens, and you would go in and you could basically have 4 or 5 functions: pay, don't pay, whatever. Then it became a bit customer-centric. With the modern systems, and particularly, I think, in corporate banking, we've seen this in Europe an enormous amount, and certainly you see it in wealth management generally in the US, is that the clients now have control. The number of iPad applications, for instance, really changes things. So I think that those are the big shifts. There are different use cases, and I would say some of the client money issues, one where you're acting on behalf of, and we have the idea of payments on behalf of, payments, BOBOs and so on, collections on behalf of. So there are obvious areas, and I know Tim will go on to some of the details of this, like real estate management, where someone might be, they have an office block and they're collecting rents, but they're also paying out on behalf of the owner of the office block, but also, perhaps one of the tenants there needs things serviced, so the janitor has to be paid, and all of those kind of things. So huge amount. There is almost no end to the use cases you can think of in this case, and that's a huge step change for everybody. And I think one of the key things about that, and I think it's almost my sort of closing thing, is it's changing the way that people can do things. It used to be that some of these things were really the province of the very large banks, the JP Morgans and so on. And in fact, nowadays you can different banks of different sizes can service different businesses of different sizes just as easily because of the technology. And I think that's the conversation I think that we should be having. And as Tim goes on, and I'm going to hand over to him in a minute, these are the considerations you must have. This changes quite a lot of things, and you're only going to be limited by your own imagination in terms of what you can do in improving your client services. And just go back and bear in mind that statistic that 96% of corporate customers will consider moving if they can get a better service somewhere else. And with that thought, I'll let Tim do the technical stuff, and we'll come back and do some questions later on. So thanks very much for listening. That's me. That's where you can find me. And on to Tim.
Thanks very much, David. My name's Tim Martin. I'm just going to talk through today, really looking at some of the current challenges that we have in this space, and really start to introduce some of the approaches of how we're doing that shift, as David talks about, turning towards a more customer-centric view and how we can shift to enhancing that customer experience. So firstly, to kick off, looking at some of the current challenges, and broadly speaking, we see that there are a number of solutions, and it's all driven around some of the existing DDA platforms. And we see that there's sometimes an onus and a burden on those DDA platforms, and it's getting quite complex around that area. And obviously, the banks are conscious of their clients and how they'll address that. But that often ends up with potentially a more resource-intensive view of how we solve those problems. So often behind the scenes of the banks, they've got large teams managing processes on behalf of their clients. This also tends to lead to areas of limited functionality. So from the banks overall, they're seeing the overall levels of complexity being too great and the lack of flexibility to move on. Now that has a knock-on effect for their clients, and obviously as I drawn in the diagram here, the clients are there often acting on behalf of their customers at the end, so there's a long stream of involved parties here. But from the client's perspective, they'll see impact through issues such as the time to open new accounts, that they're waiting on manual or extensive process at the bank to open new accounts, potentially not getting the level of visibility or potentially the self-service areas in terms of the accounts that they've got. And overall, both sides of the fence, they're left with a lot of manual processing, which doesn't scale particularly well for the clients and definitely doesn't scale for the banks servicing many of their clients. So with these challenges in mind, how can we look to address some of those challenges? So firstly, by introducing some dedicated layers in there, so introducing some dedicated technology, we can start to reduce the burden on the bank's DDA platform. We can have some technology that's focusing on the escrow accounts, and as David talked about, the sort of virtual account capabilities. With the introduction of these kind of technologies, this starts to introduce self-service capabilities. And now we can get to the point where the clients can act and manage directly onto these platforms and create and complete many of the tasks directly themselves. Additionally, with the introduction of these new technologies, this enables the banks to create more tailored solutions so they can offer dedicated solutions to the property, to the legal, to the care, to the local government sectors. It starts to widen up more opportunities to offer improved services. But creating a self-service environment for the bank, that may seem great, because what they've done is they've automated, they've streamlined, everything in the bank now is working great. But often this is just about moving the problem downstream, and it doesn't necessarily resolve all the client's issues, because if you create a self-service environment, what you've done is you've created more self-service for your clients. So the real benefit of looking to address these challenges is not only to create that self-service environment, but to start automating the processing and the controls. So if the client has the confidence that they're fully reconciled and they have the right information and balances, and as David said, real-time information is always key in this area. But simple areas such as the receipt processing, to be able to start automating those processes so the clients can really just focus on the exceptions. And as well as focusing on the automation, it's focusing on that end-to-end integration, because it doesn't stop at an account or a view of accounts. That money is associated with whatever that client's business is. So you often need to then integrate into the client's ERP or back office or primary systems. So in terms of addressing the challenges, whilst it's great to be able to have a dedicated platform, simplify what's going on the DDA platform, it's really important to consider the ongoing steps in terms of offering those levels of automation and integration at the client side as well. If we take this sort of view and look at a day in the life of, how could this appear to your clients? Well, firstly, overnight, what we can look at is a set of statements being processed automatically and the receipts being automatically allocated. So at the end of the day, you're coming in to your business with a bunch of the work done, potentially 80+% of your transactions automatically allocated. This is before you started the day. From an operational point of view, this means your clients can then really focus on any exceptions or any urgent matters, as opposed to starting the day with 0% of the work done. Indeed, we've got clients across the globe providing solutions such as this. We've got a bank in Australia. We recently ran some stats on their system. They've been running the platform for a number of years. And across their client base, they're actually recording 97% automatic allocations. So they've got a tremendous result and tremendous level of automation across a large customer base, which is a great result for them. Having been able to automate that processing on an ongoing basis during the day, it's really important to have that self-service capability to be able to go in, open accounts, manage accounts, initiate transactions, initiate inquiries as and when required. But as well as being able to do that on demand, its ability to then integrate those flows into your systems as well, into your client systems. So for the ability to create these automatic extracts for your primary systems, to be able to fully update those. So the end-to-end flow from the bank through to the escrow account, through to the client systems. So whether it's a property management system or a legal firm with their legal matters applications, they're getting all the latest details right the way through to the end of the cycle. So hopefully we can see with some of these approaches, we can now start to streamline our client's approach. And it isn't just about giving them that self-service, it's about automating and streamlining their processes. If we look to take this a little bit further, effectively from our perspective, providing that escrow account, that's the baseline offering. Getting that account there, we talk about having bank active accounts in the virtual layer, and a bank active account is one that from a customer perspective looks, feels, acts like an account. You see the balances, transactions, you can view statements, you can have interest associated with them, albeit they give you additional advantages and they are self-service. So that's kind of your baseline. And obviously that supports a lot of areas in terms of your legal firms, probably people supporting the tenancy deposits that they might keep on behalf of the tenants. Both as a bank and for your clients, how can we look to extend these capabilities to offer more services to really enhance that customer experience? Receivables, traditionally across the globe, is always a challenging area. So the ability to support more automation, but also to support more complex receivables. Life isn't that simple that you get one payment coming in that covers one thing. Often you'll get amalgamated payments coming in and so on. So the classic example we often talk about is if you are a property manager, when you're receiving payments on a monthly basis, that one payment may include an element of rent, it may include an element of service charges, there could be insurance. So your client is receiving the money, which is great, but they actually need to account and manage for that in different ways. So the rent needs to go and be passed on to the landlord, so that needs to go into one account. The utilities need to be held and effectively held in a client money type account, and insurance maybe need to be held separately and aggregated elsewhere. So it's managing those more complex receivables becomes more and more important. And if we take that scenario of a single payment covering multiple elements for a property manager, take that one step further, and if you're in a shopping mall and Starbucks has 4 or 5 outlets in the one mall, you're not going to get a payment per outlet. You're going to get one payment from Starbucks, potentially across multiple malls, and they'll go to the property manager, here's the money, we've paid, go sort it out. And at that point, you need an application that can automate, streamline, and really manage those kind of flows. And this is where we see the extended value on the escrow accounts. The next stage, potentially around the payment side of things, to be able to support direct payments from the escrow account. With this, we can get improved credit controls, so we can now start to have levels of control to ensure the right controls in place on those escrow accounts so they don't go overdrawn, so the right balances are maintained there where necessary. And we often see this in terms of merchant acquiring or the cards business, in terms of collecting payments on behalf of the merchants and then paying them out to the merchants, that as the acquirer, you need to hold on in case of chargebacks and so on. So having the payments processing integrated is key, but also having those credit control checks is equally important to make sure they're covering off for elements such as chargebacks. And the final one, which kind of touches upon both the receivables and the payables, it's really creating an environment where you can start to get closer to your customers' processes. So rather than offering an account and money just goes in and out of the account, when you get to the point where you can integrate a little bit closer to your customer, then you can offer real value, and actually you get a customer that basically their processes become tightly integrated with the bank, and you get a very happy customer, but also one that really is dedicated to your bank. Kind of example in this space is in the wealth management space. If there is a securities trade, if you're investing in a fund, for example, That's the start of the process, the investment decision. Now, off the back of that, some cash is due to be received. So rather than having a separate cash and investment cycle, bring the two together so that you, in the virtual account platform, you can start to say that I'm now expecting to receive cash based upon that trade, and on receipt of that cash, I now need to trigger the next stages in the cycle. So it moves up to the next stage of the evolution from just having debits and credits on an account to understanding a full transaction life cycle and being able to trigger events. So hopefully across those, we can see that there is obviously great value in having a self-service escrow account platform that offers the levels of self-service and automation, but there are extra levels that can be offered. And if you can also start offering more dedicated solutions for your customers, you're going to get happy customers. In terms of all these components, being able to deliver this innovation without disruption is obviously key these stages. So from a bank's perspective, when Cashfac are working with these, we're looking to extend the existing and reuse existing bank channels. So where a bank offers some host-to-host capabilities, then we're looking to use those to connect in. So we're not creating dedicated channels for an escrow platform. And from your client perspective, it's great to be able to have a self-service account, but as I mentioned earlier, having those integration options and having a true end-to-end process, again, delivers that extra level of value. So in these cases, whether it is just a UI where they can log in and perform functions or perform batch uploads, to offering the end client the levels of host-to-host connections, and as a lot of industries are moving this way, offering that API connectivity to your customers. And when we're looking at delivering these kind of solutions in these ways, in terms of the time to market, again, that's an important factor. And where we offer a software as a service approach, we're looking at being able to deliver this within weeks. And when we're offering more of an enterprise solution, we're down into sort of a few months to be able to roll out these solutions. Thank you for your time. I hope you found those points interesting. So just as my final wrap-up point, really for me, when we're delivering an escrow service, for me, creating that self-service approach is the first step, but we need to take the next stage to really enhance that customer experience to deliver them the levels of automation and integration that they require. With that, I'll hand back to Sherry for the Q&A session.
Thank you, Tim. That was perfect, wonderful information. Really appreciate that. And we actually do have a few questions here from our attendees. So the first one actually, I think you just answered. How long would an implementation project like this take? I think you described it depending on the type of platform that they're going with. Is there anything else you'd like to add to that?
Yeah, sure. If you're looking at a software as a service approach, it's really you're becoming a subscriber to an existing service, so it does become a lot more streamlined. We're looking to, as I said, use those existing channels, and in terms of the time, we'd expect customers to be on board within a matter of weeks. For a more dedicated enterprise solution, then obviously there's more levels of integration and customization available, and with that, there's obviously a little bit more of an element of doing that. It can create an even further enhanced customer experience, but there's a bit more time. So we have a track record. We've delivered these projects within 6 to 7 months from start to finish.
Excellent. Thank you. Another question here. How is it possible to achieve the levels of automation that you described for the clients? I'll leave it for you and David to answer if you can.
Sure. I'll kick off there. I mean, in terms of the automation, for me, it's a combination of rules and data. So having a rules engine in the platform that you can evoke based on what's being populated on the master account. And in terms of data, where you can start to look at saying, if I'm loading up remittance devices or expected receipts, then I can start to get some matching occurring and again, get that level of automation. So for both of those, depending on the business scenario, a rules engine with the automatic allocation, as I touched upon, the Australian bank with a very high auto match rate, it gives you great results. For other business areas, the matching side of it is a slightly enhanced solution, because not only have you got control about who's paid you, you know what they paid you for and the fact they paid you the right amount. So different options for different business requirements. David, I'm not sure if there's anything to add from your perspective on that.
Okay, I think we have time for one more question. And David or Tim, either of you, please feel free, because I think this question is near and dear to a lot of bankers' hearts. Can you tell us a little bit more about the security around Cashfac solution?
Yeah, so from a Cashfac perspective, number of areas that we focus on. So we partner with Microsoft Azure in this space to give us the hosting options, and we host through dual locations. In terms of user access and controls, we have a number of options, and primarily we can work with the bank's single sign-on, so we can sit behind existing bank security layers. But natively, we can also offer a multi-factor authentication option as well. And then if you take the level below that, within the application, there is kind of a roles and location-based permission capability. So we can ensure that the functions that users can perform are controlled, and also the data access. So whether I'm a bank user with limited functions but view across the clients, versus a client user with more functions but obviously only seeing within my client's scope. So those are the key areas that we look at security, and obviously we work closely with all our banks, IT and compliance teams to ensure the right security measures are met.
Wonderful. Perfect. Thank you. So I am...
Sherry,
yeah,
can I just jump in? Yeah, sorry, I just wanted to jump back in there on Tim's point about the automation levels. I think one of the key things about achieving those kind of automations is, yes, it is rules-based, but because you're in that client-centric environment, it's the client that's setting some of the rules. Mm-hmm. So from a bank's perspective, the load is off in a way, and that you're able to automate what they want, which, as far as they're concerned, is tremendous, and as far as you're concerned, is great. Now we can just deal with the exceptions. The exceptions are likely to be in the banking system rather than the business system.
Yeah, that's an excellent point, David. It is, the clients being able to create and maintain those rules themselves is key.
Yeah.
Excellent. Thank you. So on that note, I think what I'd like to do at this point is to thank both David and Tim for sharing your experience and your insights on the topic of escrow solutions. Very informative presentations from both of you. And out of respect for all of the participants' time, let's wrap up our session for today. I would like to ask anyone attending this webinar if there are any questions, additional questions that you may have, or if you'd like to discuss this further with any of us, please do reach out. We would be happy to schedule some time with you. And I hope everyone has a wonderful rest of their days. And thank you very much again for joining us. We'll